Hello everyone and welcome to my morning report analysis videos on Tuesday the 11th of December with me, Richard Perry, market analyst at Hantec Markets. It was meant to be the day that the UK held the meaningful vote in Parliament on the withdrawal agreement, but it has been delayed and subsequently, wow, sterling has taken a real beating yesterday. Volatility on sterling is still very high, and it's still a key factor that sterling remains a big sell into strength at the moment. Every time you get any sort of recovery, the recoveries just dissipate and get sold into. So breaking through to sort of multi-month lows on sterling yesterday, a little bit of a rebound today, but is that really enough to sort of suggest that we're going to get any further upside? Let me just show you the board. A little bit of recovery today, but generally speaking what we've seen is a recovery against the dollar. Actually, the dollar strengthened. Initially it looked really as though it was breaking down yesterday and then rebounded into the close, but it's just lost some of that momentum that it generated from that rebound yesterday and just starting to drop away again. You've got treasury yields which remain at their low levels after that really quite precipitous decline in treasury yields in recent couple of weeks, and how the yields move with regards to the fact that volatility remains elevated, market fears over economic growth in the States and inflation numbers which are seemingly underwhelming, certainly seem to have affected on treasury yields. So what the markets are going to be doing today is going to be looking towards the PPI data, the US factory gate inflation data, which comes out at 1:30. That is the big data for today. Give a little bit of a lead indication potentially for the US CPI tomorrow. In front of that, you've actually got some UK data which could actually have an impact. The unemployment data at 9:30 UK is expected to stay at 4.1%, and expected to find that average wage growth is expected to come out at 3%. So that's at 9:30, and we could see some volatility off that. However, looking further out, you've also got the German ZEW economic sentiment expected to deteriorate further to -25, and then the US PPI. So my chart today is the Swiss franc, and what we've got on the Swiss franc is priced against the euro. It is continuing to strengthen, and I did the dollar franc yesterday, and Swissy against the euro is also continuing to strengthen. You can see that in the fact that the market fell over and completed a breakdown below 113.50. That subsequently became that old support basis, which actually was a bit of a pivot really. Old support became basis of new resistance towards the end of November and into December, and now it's fallen away back below the support at 12.60. Breaking down that support continues at what is now a building downtrend channel, and likely to retest the September lows at 111.80. You've got initial support 112.20, got tested a couple of times in September, so that is on the brink of being tested this morning. But look at these momentum indicators, all confirming, all turning bearish. Bear kiss on the MACD, falling away on the stochastics, and also RSI negatively configured, with downside potential, I might add, as well. So selling into strength on on Euro Swissy seems to be the way to play it. That's not Euro Swissy. Selling into Euro Swissy seems to be the way to play it. You've got resistance, as I said, coming in around that 12.60 mark, up towards 13.10, which has been the low of the last the reaction high of the last couple of sessions. So you've got a nice band of resistance overhead supply, selling into strength. Anything that unwinds the hourly RSI towards 50, maybe 60, is a chance to sell seemingly. Negative configuration on the momentum indicators. It all looks pretty much set up for sort of testing lower, I think, on that. So with that in mind, I wish you good luck in your trading on Euro Swissy, and I'll speak to you later.